Good morning, everybody. Good morning. It is Thursday. It is April 13th. Sorry, got to turn off some volume here on Tick Strike Financial Juice. Yesterday, great day, fantastic trading session, incredible little trades back and forth on either. Well, I wasn't privy on playing the upside, but sticking with those 4,100 puts, like a lot of you saw with Elongate early in the morning, 250 pre-market, $2 at the open, 700% run as we got that initial move. Later in the afternoon, right before we got the FOMC minutes, they were down at $1.50, dropped down even lower, ran up to around $13 for 850% run on that. So great trades. Obviously you got to be a day trader for this. A lot of energy that took place yesterday. And because we have not had a minus 1% from the previous close day yet, we are still running in this zone. We traded 47 points yesterday. Fantastic. We didn't trade below 30, or below 40, but still we're trading in a very, very tight zone. So there's a lot of reason to speculate that, again, because we are looking at 4 green weekly candles, we are going to be closing below 40.85 as we go into the end of the day tomorrow, being Friday. We do get earnings tomorrow coming from banks. They could be the big warning sign. We'll see what happens. So for now, what I have out there, and I've thrown it out in the room, again, here's your puts from yesterday. So being that it is a little bit far away, but if you were going to be playing on to the minus 1% day for today, you're looking at about $1.25 risk. If we were to break down below that 40.90, start pushing down below into those 40.70s, and again, it has been a very long period since 39.09 that we have not had a minus 1% close. Longest streak, I've got to go back to sometime in 2021 to find something, and I believe it would only be in the October period, and after the October period, it's done. So again, minus 1%, it's due. It's due, whether it's today, whether it's tomorrow. Fits a little bit better for it to be tomorrow because of the banks, but it's due. So I've got a couple of trades out there in the spread room for you where, again, because our range has been really tight, can't go out there and give a table pounding safe trade. Can give the table pounding trades like yesterday, what you guys saw were just fucking spectacular. 400% on these 41.15, 41.10s. But for today, 41.20, 41.15, $1.45 is what you're getting right now. The reason I'm looking at that is you've closed once above 41.10, once, and that was back on April 3. So, you got a lot to your advantage over there to use that as a strike. And again, 41.20, 41.15, staying away from that 41.10. Again, $1.45, not bad. 41.15, 41.10s, fractionally better, $1.80 as of now. Should be able to get a fractional chance of seeing $2. I doubt it, but again, that's where it is. And here, if you want to get aggressive and that you are looking for a close to be red, which I'm not going to say we're not going to get it, but I will cover something here in a second just to kind of, give you a little bit of a heads up. But buying the 40.95 calls, selling the 40.90s, you're getting a little bit better than $3 credit. So it's a 150% trade if it does play out and we close above or below 40.90. And looking back at the trade of the week where there were $3 fills 2 days in a row on Wednesday and on Tuesday and Wednesday, $3 fills, even better. Some people were telling me they got 330. The 41.20, 41.55s for tomorrow are down to $1.95 as of now. Still, again, 4 green weekly candles, looking for a close below 40.85 on Friday. So with that said, I threw out one of those. I shouldn't be doing this, but I'm a little bit crazy. To trade for tomorrow, April 14th, buying the 40.90 calls, selling the 40.85 calls, obviously needing a close below 40.85, the Monday open. For tomorrow, you're getting around $3 right now, which again, it's a 150% trade. So bring you on really quick over here to the charts. And I don't have really much to go over, so I won't waste too much of your time. I've got a little bit of a gem for you at the end of the video, which I highly recommend you listen to. Semcar Sen, same guy that I was sharing back in February when we had the major move to the downside. Here is your SPX. Your SPX, as we made that run up there to that 41.33 beginning of the month, right here is April 3. You can see here we are just going absolutely nowhere. We're continuing to close in that 4100, 4110 area. Yesterday, second time we closed below 4100 during this period since March 30th. We're not closing above 4110 either, other than that one period where we had that move to the upside. That was the only close above 4110 that we had. So again, we've got these gaps from now going back 2 weeks where these are still unfilled. As soon as we break down below the one, we will start filling into that gap, which is now at the minus 1% line for today at 40.50. Then you've got your big 40.20, which everybody remembers from way back over there in February. And obviously, we start to come back down here below 4,000. And if we can get down there aggressively in the early periods, we are obviously going to be looking for a bounce very similar to February. And then the next major move down lower, which should fit with the full moon, the monthly range count, using 4134 for somewhere down into that 80. What am I looking at? 80 or 30, 38.50 plus or minus 20, somewhere down there. All fits right around the bear market line. So here, your VIX continuing to be compressed. We are still here, and this is only looking at 5 days, hanging on these April lows and August lows, teasing that 1811. And I can't stress enough, if you remember where your SPX August high was and what happened after it, this is where the VIX was, down here. If you remember the March of 2022 SPX high and what happened after it, this is where you were on the VIX. We are down here now. Not saying in any way, shape, or form that we're getting a 20-25% correction. What we're looking at here is a very large period of time, 10 days, which is saying, why don't you go out and buy some May, or better yet, June puts in that area over there on SPY QQQ that you've seen as a low over the last 10 days, and just put them over there and let them sit there and just leave them alone. Go and collect your money when it's time to. And again, one of the things I want to leave you with here is, unfortunately, the NDX. The NDX 4-hour chart. And unfortunately, it's starting to say you're a little bit oversold. It's not screaming it as we were way back here, where we knew we would get a big bounce back in the early portions of March, but it is down here and it is saying you're a little bit oversold, and you might want to kind of think about that. You look over here on your 1-hour chart, and your 1 hour is not yet oversold, but you are starting to get a little bit of a, hey man, there might be a little bit of a buy divergence here. So, just kind of keep warning to that. I'll throw the QQQ here just so you understand where your lines are. And your lines are pretty basic. 3 on QQQ. What we're looking at here, for the most part, continues to be the same thing. Let me get rid of these studies. And that's here. The 315 continues to be your break line. If we can get below that 315, we have a little bit of momentum to the downside. However, it's that 313 that worked for more than 6 months as resistance, which is what we're playing on right now, which is at 313. If we can get something aggressively, which all of your daily, of your NASDAQ weight stocks are all having bearish MACD crossovers at this point. All of them. All of them are having bearish rising wedge formations. All of them. All of them are going to be reporting earnings in a couple of weeks. So it's very foolish to think that you're going to get an aggressive move to the downside prior to them reporting their earnings, unless there's some major event that takes place outside, which the charts are not saying that that's going to happen. So for now, got to be a little bit concerned about the NASDAQ. But other than that, everything looks good. I'll leave you here with the gem here from Semcar Sen. Message me in the chat room. Great day yesterday. Look forward to a great day today, tomorrow, and a good weekend. Have a good one.
Let's go find Jem. Jem, what's going on? All right, here's the deal. We had the minutes. Yep. What did you think? What did your shop think? What do traders generally think about the minutes?
No news is good news. It's a nothing burger. And in our world of volatility, nothing means up.
Okay, so when it comes to CPI, in my opinion, we could argue about a tenth on core year over year, but generically, it all moderated. So the only issue is it moderating fast enough? Tell me the trader's perspective.
Yeah, look, we went from 0 to 5%, whether it's 5.25, 4.75, it doesn't matter. We're still lagging through the economy here, watching what's happening. In the meantime, it's spring, the flows are back. Hedgers are, long put, short call, short stock. And as we get towards expiration, the dealers are buying that stock.
Oh, yeah, they have to cover back their shorts, right. And it cycles up going into expirations. Exactly right. I guess your final thought, if it really isn't as important, whether it's 4 3/4, 5 or 5 1/4 to the ultimate terminal rate, what is the biggest new issue on your radar screen?
The Fed will have to take the wealth effect out of the market. They're going to have to come back and start talking the market back down. They're going to have to start taking yields back up that have been overdone on the back end of the curve. So I'd expect that from the Fed as we look forward to early May in the Fed meeting coming.
And I look forward to continually hearing from the CBO about how big our current fiscal deficit is compared to 2022. It's like $400 billion higher. Stop spending if you want inflation to go down. Tyler, back to you.